Hello, this is Wanjuru Bishangi. On today's video, we'll be talking about market analysis. Market analysis is basically being able to look at a chart and know the direction of that market. When you talk about direction, this is the same as the trend, the bias, the order flow. All those names mean the same thing. They're only different based on the strategy that you're working with. So today, I want to take you through the most important part or the most important steps when you're doing your market analysis. The first thing that every trader should understand is what we call market structure. It does not matter which strategy you're going to use, but always know or always be aware of the market structure. What is market structure? This is basically being able to learn the impulsive moves and the reactive moves. What are impulsive moves? These are the strong moves made by the market in a certain direction. What are the reactive moves? These are the breaks, or what we call the retracements. So now, when you open your chart, from our last video, I talked about how to open your charts, how to customize your charts, and also the time frames. Now, once you open your chart, you want to work or to choose a time frame. When you're doing market analysis, it's important to pay attention to the higher time frame. The best is the 4-hour chart. If you're just starting out, master how to do your market analysis on the 4-hour chart. But you can also do it on the 1-hour chart, especially if you're a day trader. You can use the 1-hour chart, the 4-hour chart. If you're a swing trader, this is a trader who holds a trade for longer than just one session or one day, you can always add in the daily chart or the weekly chart. If you're a long-term swing trader, always pay attention to what the market is doing on the monthly chart. On this video, I'll take you through market analysis using the 4-hour chart and also the 1-hour chart. So let's say you've opened your chart and you've customized your colors and now you're on the 4-hour chart. So what's next? The next thing you want to do is to check if the market is either coming from a low point or a high point. Why is that important? Because we buy from the low and we sell from the high. So if the market is coming from a low, what do we do at the low? We can only buy. So if the market is coming from a low, we would be expecting the market to be creating highs. But if it's coming from a high point, we would be expecting the market to create lows. Okay, so let me give you a clean chart. So if it's coming from a high, we would be expecting it to create lows. But when it's coming from a low, we would be expecting it to create highs. That is the first thing you want to do. The second thing is to actually draw those or mark those highs and lows. So I'll take you through a chart. So we have the same Euro USD on 4-hour chart. You see the market before it got to this low, it was creating lower lows. So let's ignore this part and work from this low point. So from this low point, we want to first get the highest push to the top side. And we're going to mark it high. Then from this high, we'll have the break or the retracement giving us now a low. This is a low, yes, but it's lower or it's higher, it's higher than our previous low or our original low. So what are we going to call it? We're going to call it a higher low. It's a low, yes, but it's indeed higher than our previous low. So we call it a higher low. So the HL here means higher low. From this point, again, we have the highest push to the top, giving us another high. But this high is higher than the previous high. So we're going to call it a higher high. Now, make sure that when you're marking your higher highs, they're indeed higher than your previous high. And how can you do that? Especially if you're a beginner, how will you know that you're not just marking highs and higher highs that are not even meeting the rules of a high? You can always use your crosshair on your toolbar. There's this plus sign. Click on it. You can take it to that high and see if that point is indeed. Okay, you check the price on this end, check if the price is higher than your previous high. Also for the lows, you can check if the low is indeed higher than your previous low. So once you do that, keep marking your highs and your higher lows until you get to the peak high. So that is how to use market structure to know that the market will continue upward. In simple language, on an uptrend, we will have the market structure creating highs and higher highs. Okay, you can actually ignore the higher lows, but we're going to use them when we'll be talking about the exit and new entries. If you meet the trend has really pushed some pips, or if the trend is already started, because it's not all the time that you start with the trend at the most bottom part. No, you may find it join the market when the trend is halfway, okay, or it has pushed for a few months. So it's important to also mark your higher lows for that particular reason. Now, let's say you're dealing with a downward trend. Now, for the downward trend, this will be the movement to the bottom side or the setting cycle. And which is the easiest way to tell that you're on a selling cycle? Of course, the market will be coming from a very high price and it will be pushing down to a lower price. So even before you do anything on your chart, you can just check the prices, see if the market is pushing downward or if it's pushing upward. So if it's pushing downward, even before you mark anything on your chart, you're able to know that you're moving downward or you're on a selling cycle. So do not overcomplicate your market analysis. Do not overcomplicate your market analysis. Keep it simple. The first thing, check your price. Am I pushing from a higher price to a lower price? Yes, that is one tick for the downward. The second tick is, am I coming from a high point, pushing down to another low point? Yes, so that's a second tick. Number 3, is my market creating lows? So from this high, it pushes down to this low before it takes a break. Now, this break or reactive move will give you a high, but this high is lower than the original or the first high. Therefore, we're going to call it a lower high. So the LH means lower high. Then gives us another impulsive push downside or a very strong move, giving us another low. But now this low is lower than the first low. So we're going to call it a lower low. Then from this lower low, the market takes a reactive move or a retracement, giving us another high, which is lower than the previous one. So we'll call it a lower high. So on a downward trend, it will be giving us lower lows and lower highs until now you get to the bottom part that gives you the low, and now you can change the trend. Now let's talk about how to transition. Despite the strategy, today will not be on a specific strategy, no, but when you're using your market structure, how will you know that now we're not creating highs, we're not creating lows? What do? Now you check on the break of market structure. What is break of market structure? Before we got to this low, we had this reactive move that gave us our lower high. So if you take your trend line, this diagonal line, on the other video, I explained how to customize your trend line. So click on your trend line, go to that lower high, left hold on your mouse and draw a line. When the market breaks that lower high, it's now a sign that we are no longer on this cycle anymore. Now we're pushing on the different or on the opposite direction. And that is why your first high should always be after break of market structure. Suppose you're on the downward cycle. Okay, you're now pushing from downward. Of course, you'll be moving from a high. So what do? You pick your last higher low and draw a line. Sorry, I missed this one here. So we have a low there. Make sure that your trend line is perfect. So you have a higher low at this point. So So this higher low is the one that's responsible for this high. So when it's broken, you want to get your first low once it has broken your market structure. Now, you have to be very keen with the rules. You have to be very, very keen with the rules. You cannot point this part here as a low. Why? Because it can also be the range from the top up there. But again, it depends with your strategy. But the most profitable way or the most certain way so that you don't make any mistake is to mark your first low after the break of the structure. So that is how to use market structure to know the trend. Now, if you're on the downward trend, today we'll not deal on, we will not talk about the entries and all that. This is basically on market analysis, but it's important that I mention, if you are on the downward trend, the market will be creating for you the lower lows. If you're on the buying cycle, which is the upward trend, the market will be creating for you the higher highs. So be very keen when you're working on that. Now let's talk about trend lines. Trend lines are given by this icon here. Okay, it's just lines that you draw. On the other video, I explained how to customize your trend line, but I can actually just mention it. So when you click on your trend line, left hold on your mouse and you can draw your line on the chart. The first time you draw your line, it will overextend. So it will have this box checked. So if I draw it, it extends to the farthest possible. But now if I need it to fit to the size that I want, what I have to do is right click, choose trend line properties, make sure that I uncheck this red box, uncheck it. It's under the parameters. If I need to change the colors, I can change it from the style part. And there I have a different kind of trend line. If I need to delete it, I don't have to touch the delete button on my computer, because that may delete everything that I've written. If I have a specific line that I want to delete, I just go to any of the edges, double click, right click and delete. Now, how do you use trend lines? To check the cycle that you're on or to do market analysis. Again, start with knowing if the market is coming from a low or a high. In this example, the market is coming from a low, we're pushing up. So I'll just click on my trend line, go to that low, pick 2 points. Okay, I can just pick 2 points. 2 points are enough. When you talk about points, it is this candlestick, the corner of this candlestick, and these are the candlesticks. Those are 2 points. If the market touches 2 points, the third point is just excess or additional validation. But all you need is your trend line to touch 2 points. If you're on the selling cycle, again, you're going to click on your trend line, find 2 points, market to touch 2 points, and draw. Now, I have people who like drawing it including the wicks. Remember, the wicks will include liquidity. That is something we'll discuss in future. But there are also people who want it to be body to body, okay? The body of the candlesticks. But whichever way you choose to draw your trend lines, you just need to make sure that the market, for a selling cycle, the market will be below your trend line. But for a buying cycle, the market should always be above your trend line. You only get to know that the market has changed direction if it violates. If you're on the buying cycle and the market closes below your trend line, now you should be concerned whether it's going to start giving you lows. If you're on the selling cycle and the market closes above your trend line, now you should be concerned to check if it's going to start giving you your high highs. But basically, that is how you do your trend lines. Now let's talk about the third thing, which is the channel. Okay, so there are different types of channels. So when you go to your toolbar here, there are so many types of channels. And how do you add more tools? I mentioned it on the other video, but it's important I add. If you want the channels, the regressions, etc., what you do is you right click anywhere on that toolbar, click on customize. Scroll down, these are the channels, so you can find whichever channel that you're looking for, then you insert, then close. Or you can actually draw one by using two trend lines. So if I'm on this buy, I can also just add another trend line, pick 2 points, the color. Let me change the color to fit the buying cycle. So you can just pick 2 points, make sure that it's hit, it's either by tail to tail or body by body, and now you have a channel. So what you do with this channel, this kind of channel on a buying cycle is called the bullish channel or the upward channel. What you do with this channel is that now you can trade both ways. When you talk about trading both ways, is that you can take the passive trades and also the reactive trades. So if you're on the buying cycle, you're expected to take a buy from this end of the trend line, okay? Buy from here, sell from the top. So at this point here, you can take the sell trade. Once it hits again, you can take the sell trade, take the buy trade. So the channel helps you to trade both ways, but be very careful. Until you master your trading, you do not have to trade both ways. Focus on trading in line with the trend. It's always more profitable when you're just taking the trades based on the trend. Something else, inside the trend line, you can also do what we call the counter trend lines. For this trend line, that is this extreme, we call it the passive trend line. There are two types of trend lines, by the way. There's a passive trend line that is really composed, comes from 2 points, okay? Very composed, comes from 2 points, straight, showing you the trend. Then in there, you can also draw other trend lines, and you can pick this point, close this point, and say this is also a trend line, okay? This will show you the short-term kind of trades, but this one will give you the long-term direction of the market. So inside the channel, you can also have other aggressive trend lines in there. So it's you to really know if you want to be trading the trend lines or the channel, and also the type of trend lines that you want to be working with. For me, I usually say the passive trend lines are the best because they generally give you the direction of the market. So you do not have to really struggle thinking, should I sell, should I buy? No, once you have a passive trend line, that's it. All you have to do is look for the entries on your other entry time frame. When you're on the selling cycle, again, you can also draw a trend line at the top. And you can also draw one at the bottom. As long as it touches 2 points, it's fair. Let me change the colors just so you can use the colors for cycle purposes. So there, in here, you can also do the aggressive trend lines, okay? They'll give you the short trends, especially if you're scalper, you can do the trend line in here. Anytime it's hit, you can take the sells. But if you're a long-term trader or a swing trader, you don't need to do all the aggressives, okay? The aggressive trend lines are for people who want to get in, get 50 pips, get out, get in, get 50 pips, get out. But if you want to hold the trade from a high to a low, all you need is the passive trend line, and that will be enough. So that is how to use your trend lines and the channels included with the market structure. The other thing is the simple moving average. Now let's clear the trend lines. When you're using the simple moving average, there's so many simple moving average values that you can use. And how do you insert a simple moving average? You go to the insert indicator. Remember, it's a trend kind of indicator. So you go to trend moving average. The most common one is the 20 SMA. Okay, it's the most are popularly used. So you get to, the period is 20, the method is simple, that's why it's called an SMA. Then you apply to close, you can give it any color of your choice, you can thicken the lines if you want, then you click OK. Once you do that, now you can see the yellow line. Now with the 20 SMA, it also works to show you the trend. If you're in a buying trend, the market will always be above your 20 SMA. Now there are instances where the rule of the SMA will be broken, but you can actually just ignore them because you see they're on the reactive moves, but it will give you good entries. You can use the SMA for entries. So on the trend, you can use the market structure, then use the SMA for entries. How will you do that? Anytime the market crosses above the 20 SMA, now it gives you an entry point. So if you're a swing trader, you can keep adding positions. You can keep adding positions. At this point, you have a buy position, hold it. When the market violates the 20 SMA, get out. Wait for a candlestick to close above the 20, get in, get some few pips. When the market closes above, you can either continue holding the positions, add more positions, or get out. You can also use it to counter trend. So when a candlestick closes below, you can take that trade, but when it closes above, now get your few pips and get out. Also, for on a buying cycle, on a selling cycle, sorry, you go to insert, indicators, the trend, moving average, same 20, click OK. Now, when you're on the selling cycle, the market should be below your 20 SMA, but you can use it for trade entries. Anytime a candlestick closes below your SMA, that's an entry point. If you're a swing trader, these crosses will show you more position or how to get into the trade, but adding more positions. So you have a sell trade here, you have another sell entry, you have a third one, you have a fourth one, you have a fifth one, you have a sixth one. So that's how you can have multiple positions on one trade. You're on one trend, but you have opened so many positions. That is by use of the 20 SMA. The next is the EMA. So I'm just going to pick the ones that are most popular or the ones that give you their high probability. Yeah? These are the ones that you use and they are easy to use and of course have good results. So the next one is the EMA, which is the most popular EMA that you know on this field. It's of course the 13 EMA, and so many people call it ketchup because it's that's Steve name for the 13 EMA. So you're just going to again to insert indicators, moving average, or you can just go straight to trend. Then the period will be 13. This time we're going to change the MA method to exponential. That's why it's called a moving average. It's usually red. That's why it's called ketchup. Ketchup. So we click OK. And there we have the 13 moving average. Same rules applies like the 20 SMA, that for buy trade, the market should always be above ketchup. You can also use it for trade confirmation or trade entries. When you want to get into a buy trade, make sure that the market has closed above ketchup. Now, be very, very, very disciplined with your entries. Do not be greedy, meaning do not get in a trade if the market has not closed above your EMA or SMA. What do I mean by that? If you just see a green candlestick, that doesn't mean that the market must close above. No, you have to really wait for that candlestick to really take its time and close above there. Okay, so be very patient, be very patient. Don't just click because you've seen a green candlestick. That should be very patient. On the selling cycle, again, you go to insert, indicators, trend, moving average. It's a 13, it's exponential, it's red, click OK. For the selling cycle, the market will be below ketchup. Again, the entries will be when the candlestick closes below catch up or the 13 EMA. Once it does that, now you're free to take a sell trade. Remember, if you're a swing trader and you have this trade from this point, every cross becomes another entry. So you can add an entry from here, another entry, an entry, an entry down here. You can also use it to counter trade. So when it crosses above, you can take a few pips. But if you're a beginner, I usually say if you're a beginner, stick with trading one cycle at a go. Just take the trend and ignore the counter trades. They are really not worth it. So that is how to use market structure. You can add your trend line to market structure just as added confirmation of the trend. You can also use the channel so that you're able to double trade, or you can counter trade where you trade in both ways. You can also use your SMA, the most popular one, which is the 20 SMA, or you can use the 13 EMA for the same way. So I hope this video will help you to know how to do your market analysis. Note, this market analysis is not based on any specific strategy. So don't come back asking which strategy that was. No, today we were just using market structure, which you find by just using your eyes, looking at the charts. But the trend lines, the channels, the EMAs, all those are indicators that are freely given by the broker. So we do not use any custom indicator. So it's everything that you can find for free on your platform. Don't forget to always watch the previous video because I'll be uploading them in a continuation base. So one video will build to another video. So if this is the first video you're seeing, make sure that you go back and watch the previous video on where to get started. So thank you so much. This is Wanjiru Gishangi. I appreciate you for being here. I appreciate you for making me part of your trading journey. Thank you so much. Keep learning, keep growing. Do not forget that Forex trading is a business like any other. Therefore, always approach it professionally. Keep learning and see you in the next video.